Good morning and welcome to OAG's latest webinar. We're going to be looking at all things to do with aviation demand as usual, drawing on the latest data from OAG and guided by our experts. I'm Becca Rowland, I'm in the UK, and good morning to you and welcome. Today, we've chosen as our topic, our theme for today, connectivity. And that means different things to different people in the industry. If you're an airline, perhaps it's about networks, perhaps about code sharing agreements, the number of places you can reach online. If you're an airport, it might be about how easy it is for travelers to fly to your destination, or how airlines use your airport to enable hub activity so people can transfer between flights. And if your interest is more from a traveller point of view, then it's about being able to get where you want with a minimum of fuss and lengthy stopovers. So we're going to be moving back and forth across this topic and seeing how connectivity is being changed as the industry continues to emerge from a few difficult years. The focus of this webinar is Asia Pacific, a bit more than other regions. We do another webinar this afternoon, and that'll be similar, but with a bit more European and North American or America's content, and with a different guest. We have Rebecca Frankowski, who's the Air Service Director from Atlanta Airport, joining us again. So if you're up for two of these, then please join us this afternoon. We'd love to see you. As usual, please ask questions using the chat function as we go through, and we'll try and pick up as many of your questions as we can throughout the webinar. So we're going to be running for the next hour. I've got two guests with me today. John Grant, as usual, who's OAG's Chief Analyst and always a source of plenty of opinion, analysis and thinking, and yeah, all-round knowledgeable person. John, it's been an exciting few hours, hasn't it? We've just seen in the industry the world's biggest aircraft order, is that right?
Yeah, something like that. I didn't sleep last night, Becca. I was so full of excitement.
I suspect you did sleep.
I certainly slept well, and you know, it's had the gestation period of an Indian elephant since the rumours started.
This is Air India, isn't it? This is Air India.
470 aircraft ordered. Airbus the slight winner with 250 versus the 220 of Boeing. Orders for an aircraft that isn't flying at the moment. Hey, there's nothing unusual in that, is there, in the 777X? But a statement of intent from both the Tata Group and the wider India aviation economy. I think it's going to be fascinating. I was saying to someone even earlier than this time this morning, Becca, in Australia, that Emirates, Qatar, and Etihad must feel like they're the jam in a sandwich at the moment, stuck between, on the one side, the Indian developments, not just Air India but SpiceJet and their rapid growth, and Indigo. And then you look in Saudi Arabia and you look at Riyadh, the Vision 2030, all of the aircraft orders and the expansion there. You know, it's going to get a lot tougher in the Middle East for those hub carriers and those that have established a position. So interesting time.
Competition was always inevitable, wasn't it? And they've had a good head start, haven't they?
Oh, only a 35-year head start. Yeah, I mean.
Yeah.
Yeah, nothing that you can say has given them a great advantage by any means.
Great. Well, thanks, John. I'm sure you're going to have lots else to say this morning. Our second guest today is Wana Savu, who's Chief Strategy Officer at Duhop. Thank you very much for joining us today, Wana. It's your first time with us. Your background is full of innovation and change and transition and transformation in the industry. I see on Duhop's website, for people who aren't familiar with Duhop, that their mission is, I think it says, to revolutionize travel connectivity. So tell us a bit about Duhop and what the mission is, and what's your vision for the industry in terms of connectivity.
Thank you, Becca, and thank you very much for inviting me and inviting us to share more about this mission and vision. So first of all, who is Duhop? Is an IT company. It's based in Iceland, but we do have people, part of the team, which are based in different parts of the world. And indeed, at the core of what we are doing, I would say innovation. We are very much led by this aim to continue to innovate in the travel industry, but to innovate in the travel industry with this aim to elevate, if you want, the end-to-end travel experience. So at the core of what we do today, connectivity and partnerships are there, and it's one of the reasons why I'm so glad to be part of this webinar and of these discussions we're going to have today. And to be a bit more concrete, so in terms of connectivity and partnerships, we're working today with more than 75 carriers, mainly airlines, but we do work as well with a number of ground transport operators. We're very happy to say that, for example, in the last year, we have reached over 100 countries through our global network, for example. Also, looking at the numbers, we are selling around 5,000 unique ONDs every month, which is quite of an, I would say, interesting number to share with the audience. So yeah. This is what we're doing today, but we have seen the need of the partnerships and the connectivities. It was pre-pandemic, and I'm sure we are going to discuss about what the pandemic change and how this is building and helping, if you want, airlines to restore their networks, to restore connectivity. So in short, our vision is to continue working with carriers, with different type of carriers, and building this partnership ecosystem, if you want, making this partnership marketplace much more solid in order to, why? Well, facilitate, if you want, all these different type of partnerships between different type of airlines with different type of business models, which we know how difficult and challenging it is still today. Why? Well, there are two main reasons, because we strongly believe in the power of extending network, increasing connectivity, and you know what the benefit again for the end consumer, but also in putting much more services out there for the travelers. So great. I'm very much looking, I will be sharing much more of this during the presentation today.
Yeah, I'm sure we're going to hear that phrase partnerships many times, isn't it? It's not a word we use an awful lot actually in the webinar, so it'll be interesting to get more of your thoughts on that. So we always start with a look at where we are in terms of global capacity, partly because this gives us a bit of a forward view in terms of where the industry's at. John, do you want to talk us through this slide as you normally do? We've got a main chart which shows us global capacity over the last few years and how it's tracking this year. And then on the right, we've got domestic and international.
Yeah, so last couple of months, Becca, as we've discussed before, have been pretty quiet in terms of capacity rebound. We've plateaued at about 95, 96 million seats a week. And that's been pretty consistent from December through to last week, actually, or this week, when the Northern Hemisphere half-term holidays added another 750,000 seats back to Western European capacity, primarily from the low-cost airlines. But we are likely to see an increase and break through that 100 million seats per week mark, probably towards the end of April, partly because of more capacity being added back from the low-cost airlines, who, you know, shape and flex and adjust as necessary, but also because of a slow re-emergence of China, and that's positive. We have some interesting characteristics though. It's fewer flights but more seats per flight is, you know, a message that we're seeing. So the challenges for the industry continue in terms of resources. Phenomenal pay offers on the table from Hawaiian for their pilots last week, 32% pay increases, you know, and other parts of the industry either looking for or having accepted quite large pay increases. So it's unlikely we're going to see airfares falling very soon, given that the airlines are having to pay higher salaries and airports are having to pay higher salaries to keep and even attract new staff. Domestic capacity in the US is slightly ahead of pre-pandemic levels, that's great news, and that's a good sign as well. So it really is, I think all the focus now is around the reopening of China, how that's going to play out, how long it's going to take to play out, the impact of the Russia-Ukraine situation, how that's impacting airline performance. And yeah, it's, I think we're set for a good summer. The numbers look really good. Demand seems to be strong. Airfares are still very high. Profit margins are good. Air France, KLM, and IAG announced their 2022 profits next week. So, we should expect them to be good. Hope they're good, because it'll be a great foundation for the rest of this year.
Yeah, great. Okay, let's have a look at some of those regions. Now, as I said at the beginning, we focus on this webinar a bit more on Asia as opposed to Europe and the Americas. So what we've got here is by month the capacity change versus 2019 for the same month for some of the major markets in Asia. And also for all countries worldwide, which is the black lines sort of in the middle there. So we're seeing a good positive trend, aren't we? On the whole, everything's still moving ahead. Perhaps the rate of improvement is slowing slightly, and China's still up and down every other month, isn't it?
Yeah, inevitably the rate of recovery is slowing down. I mean, I don't know about you, Becca, if you ever got 80% in any of your exams, and I did every time, getting that extra 5 or 10% is the hardest part of the whole answer. And I think that's the same here. Getting back that extra or the capacity we previously saw in the environment we're in now is really, really difficult for airlines. And many airlines, I think, are accepting it's probably going to take more than a year before that situation is going to be resolved. You can't train a pilot and put them in the sky in 3 weeks. The big drop in Chinese capacity is because the Chinese airlines are still finalizing their programs for April and have not released their capacity.
We typically see the Chinese, they put the capacity in quite late, don't they? And they change the capacity at very short notice in a way that some of the other airlines we're used to sort of working to seasons and filing ahead, and so some of that's certainly that large drop we're seeing there is that.
And that's they have essentially their own equivalent of an IATA slot conference, and after that's been finalised and that's been done through an online process now, then they release schedules, of course. To compound that sort of situation and thinking at the moment, they're all beginning to replan and focus out on international services, essentially within the Asia Pac region to begin with. But it's certainly, the 8th of January was a great day for the industry. China announcing the easing of restrictions, but we're yet really to see the impact of that flow through into the numbers. And when we look at the impact of China, in the cases of South Korea and Thailand and Vietnam, China has an impact on where they are today as well.
So John, we often get a question, even though we've been doing this for a number of years now, every month, about this is capacity, what about traffic? So we know that airlines, and we'll come on to this, we've got some data about this, airlines are generally operating slightly larger aircraft on average than they did before the pandemic, but there's fewer flights. So what do we think is happening to load factors? So are they strengthening through this time? If the airlines are because of resource issues, they can't just increase the number of flights. Are we seeing loads move up, or?
Not at this moment in time. I mean, they appear. The first quarter of the year is always the softest in terms of demand in the Northern Hemisphere anyway, and they appear to be, holding at normal type of industry levels, so high 70s, low 80s at this time of year, and airlines are capacity managing. There's no doubt about that. They're looking for those higher fares. They're holding out for the extra $20 or $30 on an airfare. and I think that may have suppressed a little bit of demand in the last 2 weeks of January, first week of February. But this half term, it looks like demand is really strong in Europe. Low-cost airlines have been adding capacity.
Yeah, we saw. Was it nearly 1 million seats are added this week compared to last week in Europe?
750,000.
Yeah.
So the airlines adding that capacity, they are confident they're going to fill those seats, and I think they have. So it will be a really interesting set of February results we see from the legacies and the low-cost carriers towards the third week of March. I think pent-up demand is really strong. We may have a recession, we may have inflationary pressures, but for many people, holidays, visiting friends and family, they're embedded in it. Juana, what about from Dohop? Are you seeing the more volumes of activity from your customers and your sites?
Well, definitely yes. The answer is yes. We do see, you've mentioned Europe, we do see indeed quite a high increase in Europe, but we do see as well an increase with regards to Asia as well. I just wanted to kind of share also, talking about capacity, I think it's interesting to look, because you've mentioned capacity, but you've also mentioned the change of this one to answer and to meet the customer demand. And I think it's also interesting to link this one on how airlines are also looking to, if I may, reshape their networks, right, in order to kind of adapt to all these different market conditions and to meet with this fluctuating customer demand. And Asia is definitely a very interesting example to look into, because I mean, until lately, with still the COVID restriction and so on, different regions were not at the same, I would say, level of being open. So this is something we've been, looking and following very carefully in the last couple of months, because what this translates into is that airlines are looking now to either add more routes, for example, or to partner, going back to our partnership topic, and even, looking and being much more open now to partner with different type of airlines in order to look how they can, again, reshape or change or enlarge these networks. And then you're right, John, there is another aspect in terms of the aircraft type and, switching this aircraft type in order to meet this demand. So either looking to the smaller ones or bigger ones when the demand is growing. And yeah, the last but not least is all this changing in terms of flight schedule. So I think it's very interesting to see the link and the relations between all these I would say different factors and different considerations that airlines are looking into.
Becca, there's a question from Yan Ling saying, what is the assumption to forecast Chinese traffic down sharply in April? We're not. What we're saying is that is because they have not filed their capacity, and that's what is currently in the system. We can't and we will not show capacity that was operated in 2022 because it might not be operated in 2023. So it will, when the data is supplied by the Chinese airlines, it will be in the systems and it will be available for sale in the GDSs. If we gave them April 2022 schedules and the GDSs made bookings based on those schedules, they could be making a hell of a lot of rebookings a week later. So we just need to be cautious about that. That's why it looks as though.
And when would we typically expect to see Chinese schedules firm up for the period?
About now. It's almost like their Valentine's Day present to the rest of the world. Here's your schedules. I mean, I got a bunch of roses from my wife, but everyone to their own.
Okay, we've got a slide specifically looking at China. Now, bear with me because it might be a bit confusing. We've got this interesting radar chart, and we've looked at 3 months ahead, February, March, and April, and looking at capacity from China, just international capacity from China to each of these regions that you can see listed around the edge of the radar chart. and we can see what the number is the percentage change versus the same month in 2019. So the fact that the yellow line is further outside the black and the grey line shows that as we move through those months from February to March to April, we're seeing the capacity relative to 2019 improving. Obviously, these markets are different sizes. Northeast Asia is massively bigger than Africa, and we're seeing Africa recover fastest, but it's a fairly small market, isn't it, John? So you and I, when we discussed this chart before, we sort of had different views of it. I was looking at it and saying, oh, this is good. This is international capacities coming back from China, and this is the shape of it. And you were saying it's still pretty slow. So, you know, what do you think that we conclude from this?
I think we conclude that we disagree, Becca.
Okay.
but more,
yeah,
that's quite often the case. I think the expectation that China would suddenly reopen and we would see, rather like we saw in Europe and in some parts of Southeast Asia, a sudden wave of outbound demand and capacity is not likely to be the case in China. It is going to be a much more structured, a much slower burn and recovery. And there are a number of reasons for this, you know, not ranging from the one that we keep coming back to, which is available resources. The need for Chinese airlines who had already published their schedules to readjust their schedules and focus back out towards international destinations. The types of travelers and the travel profile of the outbound market from China, because let's be realistic, much of the anticipated demand is going to be outbound from China. And until very recently, 2 weeks ago, Chinese group travel was still not permitted. And for any of us who've been in an Asian hotel or a Southeast Asian resort, you know, there are large groups of Chinese travelers. So all of those factors make the recovery slower than I think people would have anticipated, and maybe we were being too optimistic. It's interesting to see, you know, how this will shape out. And yes, Africa does look as though it's a rapid and tremendous recovery, and it's only 9% less than it was, you know, versus the same month in 2019. But there are probably no more than half a dozen flights from China to Africa, and you know, quite a few of those are operated by Chinese airlines. But there are also African carriers who specifically purchased aircraft to fly to China. You know, the likes of Uganda Airlines, for instance, a couple of 787s purely to fly to Guangzhou, and they've already put the capacity back into their networks and are selling it again. So
we've got a comment from Harry, who's hi Harry, because I know you're a regular listener. It makes a good point, really, that for some of these other regions, it's the non-Chinese domicile carriers who've been slower to come back, isn't it? And we've talked a lot on these webinars about what's happening with European carriers or North American carriers, and the fact that they've got some time to work out how they fly, how they change the schedules, how they change the slots to account for the closure of the Russian airspace. And so Absolutely. We're not seeing them come back, are we?
No, we're not. And you know, from Europe, we've got BA and Virgin who've announced services starting, I think, in May and June, and Lufthansa have announced services. We expect Air France KLM to make similar announcements. Finnair are already, you know, back in the market in some way or form. But it's a complex return for European carriers. They have.
I don't know that.
Excuse me, Alexa, be quiet. So we have. We have things like 2.5 hour longer sectors that we have to accommodate in a westerly direction back from China via the North Pole and over US type airspace and back down on the other side of the Great Circle routing. And for the airlines, they've got to move slots around. They've got to be willing to accept that an aircraft is going to be away from base for over 24 hours, sometimes up to 27, 28 hours. And it's going to have all sorts of issues on scheduled integration and planning. And in this particular moment, when pilot resources are tight, you know, when you're doing a 15, 16 hour sector from China back to Europe, you need 4 flight deck. And if you have 4 flight deck, excuse me, that means you're then in a situation where you've taken 2 pilots you could have used on a transatlantic flight. And that's a resource issue. So there's lots of opportunity cost about going back into this market. So it is going to be a slow burner. And the US airlines, quite frankly, have shown no real interest to go back at all yet.
And you know, we talked one about partnerships. Are we're going to see more partnership operating with the European and North American carriers working with their Chinese counterparts to try and make this work better for them?
Yeah. You know, Willie Walsh at IATA, used to be your boss, Juana, I guess, has come out and already said, you know, it's unfair competition. The Chinese are flying over Russian airspace, they're flying shorter sectors, and it's not fair on the Europeans. Well, it is what it is, and there's not much that can be done about it. It's geopolitics involved in influencing aviation again. I think, you know, a lot of European airlines will say, let it be, and we'll take connecting traffic that Air China dump in Frankfurt as part of the Star Alliance, or China Southern dump, you know, to Amsterdam, and it goes onwards with KLM or Air France. So yeah, there's nothing you can do about these things, Becca. You know, the Chinese airlines may have the advantage at the moment, as does Air India flying over Russian airspace to the US at the moment. You know, that's an advantage they can enjoy.
Juana, did you have something to add there?
I will just add in short. Well, and it's really in short, and it's very simple. For us, we're working with our airline partners, and it's really, you know, from different type of regions, different type of carriers, and you know, I mean, most of our customers today are being low-cost carriers, but we're also working more and more with full-service carriers. So all that to say is that ultimately, the way we are seeing Duhop role in all this partnership is connectivity is how can we help all these airlines, of course, based on if you're following different market regulations and everything that needs to be followed, but how can we work with them and facilitate again this network expansion and well, ultimately work to increase this connectivity, because this is what seems to be more and more needed for the restart to cope with customer demands in various regions for various routes. So yeah, it's a joint work. How can we achieve that? How can we have more options and better options for the travelers out there who wants to reach, you know, more and different destinations?
Okay, let's move on from China. We've got a few slides now looking at some of the sort of trends that are happening. We've got a few what we call the key metrics. So the first slide here is looking at the number of carriers by region. It's something that continues to surprise us, I guess, that the fact that there's not been more reduction in the number of airlines. And just, you know, when we look at Europe, 500 airlines, it seems such a large number. And is that workable? I know when we spoke about this earlier, Juana, you said that's not the issue. The number of airlines isn't the issue. It's how the future is and how they work together. It's, you know, not that we need consolidation and reduction in the number of airlines. I guess to paraphrase, it's a bit old hat, but it's about partnerships now. Is that? Do you want to elaborate on that?
Well, it is, and it's true that when we spoke, I know this webinar this morning is mainly focused on Asia, and you know, we were talking as well about Europe and how, you know, how many types of partnerships do exist today, interline partnerships exist today in Europe. But even in markets like that, we still see a huge, if you want, increased number of opportunities and new connectivity that we can reach. And I would say, well, already let's take, the full service carriers with LCC type of relationship, and we knew that there was already a need and an appetite to work on this one pre-COVID. What I can share with you is that definitely, I mean, with the pandemic and in the current context, we see more and more demand to bridge this, if you want, low-cost world with the full service carrier world. But as well, where the interesting part comes now is that we see this increased, at least, interest and appetite to look into how we can expand that with more and more intermodal now type of partnerships. So really, looking into the air-to-air network and how can we expand that and really look, with other type of transport operators. And this is maybe much more trendy and much more, if you want, of a high topic agenda in Europe because of the environmental agenda and the sustainability. But it's not just for Europe. Ultimately, what we believe is that this is going to be more and more global and more, I would say, a topic, part of kind of everyone's type of an agenda. So that being said, even in markets where we have partnerships, we still see the needs, of course, and the opportunities to have new ones. And well, bridging like Europe with North America, or even Asia with Europe and Asia with North America, it's still something we find that there are a lot of new type of connectivities and partnerships that can be put in place. And just to kind of give you a figure, how we are seeing, why we're seeing as well this trend increasing and moving forward. I mean, we've been looking, and lately we had around 200 unique partnerships that we have sold actually in the last couple of months, which is quite of a considerable number, I would say.
Okay, really interesting. Okay, we talked about aircraft sizes and the change in average aircraft size. So we've got a little bit of data about this here. The chart here on the left shows the frequencies this week versus the same week in 2019, and the seats. So we can see there's a difference, particularly for Latin America and North America, which basically means that the average aircraft size has got bigger. And in the case of North America, we've gone from 116 seats on average in scheduled aviation to 130. That, to me, John, seems like a really big change. I don't remember in the industry seeing that sort of change ever, really. We expected the average aircraft size to sort of stay the same. It just changed a little bit, but over a relatively short space of time. I mean, I guess that's because the smaller aircraft aren't being operated. It's not that there's new aircraft. It's just that the smaller ones have come out of operation. Is it?
It's, you look at it and think, wow, this is suddenly beginning to shift, because if you look at places like London Heathrow and the really big airports, for over history, every year you would expect average aircraft size to grow with the A380s and 777s. But for every A380 at Heathrow, Lufthansa would downgrade from a 320 to a regional jet of 70 or 80 seats just to hold a slot. So this is a bit of a seismic change. It is completely and utterly due to a lack of resources. And in the case of North America, there are many tier 2, tier 3 cities with where regional connectivity has been completely and utterly shattered because the mainline carriers and their partners have had to drop that destination. They just cannot resource it, they cannot operate it, and they're having to make some really hard choices. And this is a bigger issue than just the airline industry. It's the impact on regional economies. Companies who are located in these secondary cities may lose the connectivity that allowed them to do deals in other parts of the world and to expand their businesses because connectivity has been shattered. And it's also a reflection of those. The smaller aircraft types are not being produced in the same volumes and the same scale as the 320s and the 737s, single aisle jets. And when you see the orders from people like Air India and others, you know, and Saudi, it just accelerates that differential. So I think we could see this growing even further. I don't, you know, 130, could it get up to 135, 136 in the next couple of years? Maybe. And what does that mean? What does it mean for airports? What does it mean for how they plan their operations? You know, the capacity they have. Do I have enough air bridges? Do I need more remote parking stands? It has implications everywhere.
So when everybody across the aviation ecosystem is struggling with resources, and we know that, you know, plenty of airports are doing major recruitment fairs, and what we're hearing anecdotally is that staff turnover, you know, people join, but then they don't necessarily stay, because we were hearing yesterday, you know, if somebody can get a dollar more an hour, they move out of the sector. So this helps in a way the airlines, but everybody at the airport as well, doesn't it? You know, your duty-free stores and retail offer, if they're struggling to recruit, if they're planning the gates, as you say, you know, that fewer flights probably makes it easier to manage the process. Maybe not the retail, but
yeah, you know, it does. But we're still not as automated and using new technology as much as we probably could. You know, I mean, you go to some parts of the world and you see some amazing sort of paradoxes. You know, I was in Japan 2 weeks ago on a Japanese domestic flight, and there was I printed out my boarding card remotely. I had a QR code. I went through security with my QR code. I could have boarded the aircraft purely with my QR code. And then there are 6 Japan Airlines passenger services staff just waiting by the gate, bowing to me as I board the aircraft. Now, I know I'm important, but I don't need 6 Japanese airline staff to be bowing as I, you know, board the aircraft, and it's cultural. We could do more about automated baggage. There's so many ways we could automate things and make it easier for us as an industry. Automate self-connecting. You know, at the moment, if you, and Juan would know better than many, if you self-connect quite frequently, you have to pick your bag up off a belt and drop it on another belt. That doesn't need to be necessary, does it? That's just, you know, that's just the systems not talking to each other, or the airlines, quite frankly, playing silly buggers with each other and not being prepared to accept the other airlines' bags.
Indeed. And we know how important is and is going to be, you know, just to cope with this increasing customer demands, the need to facilitate this end-to-end travel, you know, journey. And I can tell you, I mean, this is what we currently have today for many airlines to provide, if you want, this connectivity with a self-connect. But we have also started to work with more and more airlines, but as well airports, in order to look how we can really facilitate this airport travel experience when it comes to the transfer of the passenger and the transfer of the baggage, because ultimately good customer experience, it doesn't just sit into a shopping and booking, right? In terms of I find the right connection, the right itinerary, and that's it. It ends once the passenger will actually consume that and arrive safely to the destination. So we do acknowledge the importance of, first of all, the importance of the airport and of the infrastructure to support and to smooth, if you want, these connectivities. And we also acknowledge that it's easy to say on paper, we can, you know, connect that carrier with that carrier. Already between a different type of airline business model is complicated, but when we're putting intermodal, it's becoming even more, you know, complicated, and the infrastructure has definitely a very important role to play. And then last but not least, it all ends and results what is, you know, with all that, putting it together, what would be the value proposition for the end consumer, for the traveler. And this is something we are constantly working, again, with the airlines, with the airports, with different stakeholders to see how we can improve that.
Yeah, good. Thank you very much. I'm going to whiz on. I've got a bunch of questions actually at the back of my head, but we can come to them at the perhaps at the end. Some of these things I'd really like to pick up a bit more. In terms of another sort of change we're seeing, rise of the low-cost carriers. we've seen pretty much everywhere them increase their market share. Not that they've necessarily grown as a sector, it's just, while the industry is still operating a bit below 2019 levels, they have gained share. What are the implications there for connectivity? Is it that they will traditionally, they've been more point to point? Is that the way we're going to see travel? It's been a debate that's been going on as long as I've been in the industry. Is the future in point to point, or is it in connecting? Or is it going to be about trying to find partnerships so that people can travel between local carriers?
It's interesting when you look at these two tables, Becca, because you have what I would call almost more of a hybrid low-cost carrier in the Middle East. Flydubai are Emirates, and they're Emirates low-cost arm, but they have a great business class product, and they code share with Emirates on particular services. And similarly, EasyJet have their EasyJet Connect product that's driven by Duhop, which does really well, and they connect with legacy airlines. I think the standout things for me are the relentless rise of Ryanair, and the fact that when you look at those numbers, you probably think, oh, EasyJet, they've lost 13% share. And yes, they have, but we shouldn't be obsessed with market share. If that is a more profitable network operating from Europe's major commercial cities, and they're becoming more of a hybrid carrier, and they produce more profitability than they've done in the past, their shareholders would be delighted. Their shareholders might be surprised as well, but that's another thing. And in the Middle East, you've got these carriers who are growing rapidly. FlyNAS, I mean, the Saudi 2030 vision is amazing, and they're going to be a big benefactor. But it just goes to show, point to point will evolve into point to point to point, and connectivity is going to become a crucial part of that for all of these airlines. It can make or break their profitability.
Indeed, and I do echo that, because indeed, John, I mean, as you were saying, we are working, well, EasyJet is one of our biggest partner, of course, but we are working with them and other LCCs, and we see the interest, not just from them actually, but it's vice versa, as you've been mentioning, from the traditional carriers. And the main two reasons, just to keep it very simplistic, is exactly as you were saying, is meeting demand and really looking, how can we extend this network today to meet this demand? How can we put more connectivity for the travelers, for this type of routes or for this type of markets? It all comes as a joint work together, because ultimately what you would want is to have more traffic, right? More capacity, more customers, more travelers flying from A to Z, and as you said, point to point to point to point. So, yes.
Becca, there's an interesting airline not on the list of Europeans that we always forget, which is Jet2.com. Now, they're not very big in the south of England, but they're huge in the north of England, and they now have an ATOL license, Air Transport Operators license, for holidays, which is bigger than that of TUI in the United Kingdom.
Yeah, actually, I've just come back from skiing in Switzerland and flew back on. Now I've moved, so I'm in Oxford. I flew from Birmingham, and that was a Jet2 flight. Yeah, so I saw their product firsthand on the weekend. Yeah.
So I mean, so you've got this evolution of the low-cost carriers. They're now those low-cost carriers who were purely low-cost carriers, didn't do anything complex. Many of them now have their own holiday divisions, and EasyJet's profits for the last quarter, for the last calendar year, they actually said their holiday division outperformed their expectations significantly. Same for Jet2, same for Ryanair Holidays. These guys are not just low-cost carriers, but they are creators of holidays. They've got tremendous purchasing power in the travel ecosystem for hotels, car hire, for ground transfers. They're really, really powerful players.
And I guess what they are it's a really good point, John, because I guess what they're beginning to do in that way, certainly for that holiday, that leisure market, they're doing it's not quite door to door, but it's not far off that, is it? It's from your departure airport, they get you to the door of your destination. So they are putting all those pieces together in a way that I guess the vision for the future, especially with sort of multimodal travel, is how do we not just connect up airlines for connectivity, but how do we connect them with railways and with the ground travel at the end of a journey, so that we're moving towards partnerships get us to that sort of door-to-door travel ecosystem, which is some way off for mostly, but it's a good point that the likes of Jet2 in some ways are perhaps further ahead with that.
And that the interesting thing is, if you look at the profitability margin for the ground transfer, for the fast track security, for the priority baggage, whatever it happens to be, that's where the margins are in the airline industry today. The margin isn't on the seat, it's the ancillaries and developing the ancillaries. And I thought it was really interesting that EasyJet actually in their last investor presentation talked about revenue per seat rather than revenue per passenger, because it's now this product is commoditized, like it or not.
Yeah, very, very interesting. Okay, a little bit more. The next slide we've just picked two regions here, Middle East and Asia Pacific, just seeing where carriers domiciled in those regions, where they're flying to in terms of other regions, just to see where there's been some shifts. Perhaps no surprise for Asia Pacific that there's a reduction in flights to Europe for Asia Pacific Airlines, reduction to North America, reduction to Southwest Pacific, more to the Middle East. We are seeing airlines adjust their networks, aren't we?
Yeah, we are.
And some of this is geopolitical, isn't it? And some of it is probably long-term trends.
Yeah, to Juana's point earlier about that transition, low cost carriers. If you look at the Middle East domiciled carriers, that growth in Africa is all about low cost carriers coming into large markets where there is a large diaspora in the Middle East, in the United Arab Emirates or wherever it happens to be, and beginning to encourage more VFR traffic backwards and forwards. And there's a lot to the Horn of Africa that's being conducted at the moment, and it's growing. It's only 2 flights a day, 2 flights a week. It doesn't need to be daily. They can be at 3 o'clock in the morning. This market will move at any time of day. It doesn't need to be, from an airport where the diaspora are located. They'll get a bus to an airport where they can get a service at the right time or with the right fare. And I guess the frustration, and this is partly to Clive's question that he's just asked, and he's in Lusaka at the moment, is it's really frustrating when you can see this groundswell of activity from non-African airlines bringing capacity into and out of the region, and yet you can't see the creation of low-cost carrier demand and capacity within Africa, because governments prevent it from happening, because air taxes are disgustingly high. It's even higher than the UK's taxes on aviation, in a market where average per capita per person is very low. So it's no surprise, but it is, I think it's how networks are shifting. You only have to serve a destination twice a week, and you're creating 3, 4, 7, 10, 11, 14 type holiday VFR opportunities. And if the weekend is in between those flights, then you've got people who can go back and forth just for the weekend if they need to. It's a different, airlines are looking at it as schedules and networks in different ways now.
Yeah. Okay, really getting onto connectivity. OEG has a tool, Connections Analyzer, which we use a fair bit to look at connectivity. And it allows us to see the number of possible connections between flights in and flights out of an airport. And what I've done here is take some of that data and looked at the possible connections at Singapore and at Atlanta, just to use 2 airports. I've looked at what's possible this Friday and compared it to the 3rd Friday back in 2019, using a 6-hour window and a security of 150, which we won't explain what security is here now, but it's about sort of how direct the journey is. So we saw earlier, John, that capacity flights were down, but not by the sort of level we're seeing here. The number of connections possible down 40% at Atlanta, down 50% at Singapore. This is because there's fewer flights, isn't it? It actually has quite a massive impact on connectivity for a hub airport.
Yeah, take away one frequency, and then think about how many flights that one frequency used to connect with, and that's a massive multiplier effect. And it doesn't take long that you take some flights away and you begin to see some quite significant changes taking place, and that's what we're seeing here. Many destinations that were 4 times a day or 3 a day at the moment, and things like that. I mean, it's interesting you got a 6-hour connecting window, because I think some people in some cities are going to have to accept that they're going to have longer connecting times than they used to have, and that's the price of having any connectivity, and that longer connecting time is going to play to the low-cost self-connecting product that people like Dohop are creating, because people can take a bit more time, and they've got more choice. And Juana, I mean, you've got lots of various options within 6 hours you can take at London Gatwick, couldn't you, with EasyJet and anywhere else?
Exactly. And again, it might sound repetitive, but it all goes to the customer demand. You might have different type of customers looking for a shorter connections, while others would be happy to take a longer one, as long as as long as they also have all these different range of services, right, to help them to have a better experience or to take the most of their travel experience. So I think we kind of touched during this discussion. So it is a lot about connectivity, expansion, if you want, in terms of network, but it's as well in terms of what are the more and more services that not just airlines, but we've touched on airports. We have here the hubs as a very good example. What can if you want, all these parties, they can work together to put all these additional services into offers and make them available in an easy way to the passengers. And this is I would say one important topic which is part of our agenda right now, and we're working to how we can really increase these offers in terms of services. And you've mentioned earlier, John, the EasyJet example, looking to put even much more type of services out there to the customer. I like the Singapore example because I've been following, it's one of my favorite airports, I must admit, and I've been following what they've been done during the COVID. And I found interesting the fact it's not just that they have invested as many others in terms of, ameliorating infrastructure and answering all these COVID safety, I would say, requirements, but they've also focused to expand the network in terms of destinations. And I felt that during COVID, they put even much more focus on this long haul with low cost carriers type of a connectivity. I don't know what are your thoughts about it, but yeah, following what they've done in the recent 2 years, there are different ways hubs they were looking to.
Yeah, I mean,
I think our observation of Singapore has always been that they're ahead of where they need to be. They are always thinking further out than many other airports, and you see that reflected in their investment programs.
Yeah, but the base carrier, the national asset, has a very clear strategy of airline ownership and positioning and branding, where they've got the mainline carrier, then they've got Scoot, and then if you go in many reservation systems, you can see, or if you go in Singapore Airlines reservation system, if you try and book a flight online, they'll give you options with Scoot as well. and the Scoot product isn't exactly Singapore Airlines product. Trust me, it's not bad, but it's not the same. So you know, even the prestige brand names are morphing into this space and beginning to work in this space as well. And Becca, you're right, Singapore is always ahead of the game. But we're beginning to see that in the UK, aren't we? The new BA at Gatwick or short haul is really a low cost airline. It's happening everywhere. You've got Transavia within the Air France KLM group. It's Eurowings within the Lufthansa group. You know, whereas we had a clear distinction between and segmentation between brand, product, value, proposition, we're beginning to morph back into that mid ground of shades of grey and mediocrity.
Well, I would have not called it that way, but I do confirm that we see more and more, if you want, this new type of business models that airlines are, you know, are moving towards and looking to explore. And you are right, John. I mean, maybe it's, you know, it's correct to say we don't have that clear distinction that we had years back in terms of LCC and full service carriers. We see more and more of this hybrid type of a business models that carriers are looking.
Yeah.
Okay, we've got one other way we can look at connectivity, and that's in terms of at an airport, what proportion of the traffic is connecting versus what's O&D. And so on this table here, on this chart, we've got a number of airports, and we show the proportion in grey that was just origin and destination traffic at that airport in December 2019, and then the same figure for December 22, and again taken from OAG's traffic analyzer. The December data for 22 is not quite final, but it gives us a good idea of what's happening. So interesting. At Singapore, we're actually seeing a higher proportion of connecting traffic than we did back in December 2019. In the other airports, it's catching up pretty quickly, actually. So, you know, we saw certainly connecting traffic fall away pretty fast at these big hubs, but it seems to be coming back quite healthily now, doesn't it? That they're functioning as hubs again.
Yeah, you know, it's interesting because everyone has said for many years, you know, everyone who goes to Dubai connects onwards. Look, the myth is dispelled here.
Yeah, no, they don't. We've known that. It's 50%, isn't it, at Dubai?
Yeah, so, you know, for everyone who's getting on, or two people getting on, one's going to go on and one's going to stay.
And is that though partly? I mean, we've got a colleague who's in Dubai on holiday this week. The more people connect through Dubai, they've done a really good job of then selling it as a destination, haven't they?
Yeah, absolutely. It's worked. You know, it's taken them 30, 40 years, and that's the type of investment you need. But it's worked for them. And we're talking percentages here as well, aren't we? So you know, if you look at Hong Kong, this is a pretty grim situation, but we expect that, don't we? You know, the proportion of connecting traffic is much lower than it was in December 2019. And into absolute volume terms, it's you know, millions of passengers.
Obviously much lower.
Now, the problem there is, of course, that for the airlines and principally Cathay and their associate airlines who are based in Hong Kong, that connecting traffic was where they made their money. You know, that's their profit, and it's disappeared, and it was all linked. Well, initially to the social unrest in Hong Kong, and then obviously to the closure of China. The one that you know, I think is really interesting is Istanbul, when you look at how much connecting traffic there is there. And if we put the actual market sizes on, you know, this is a much bigger market than Doha, for example, and it's got very large proportions of connecting traffic. You know, nearly 60% of its traffic is connected.
Yeah, but as we've said before, to be a hub and to attract that connecting traffic, you are vulnerable. Those travelers can connect through somewhere else, and it'll be an interesting next few years seeing a couple of other airports try and establish themselves as those sort of Middle East, Southeast Asia sort of connecting hubs, and try and steal some of that market, I guess. Okay, one more slide. I think we've got a minute left, so it's very, very quick. What does connectivity mean to travellers? And we've just popped a few things down here. I know when we spoke to you before, Juana, you had a vision of connectivity as being, eventually would be this door-to-door. Is that the goal?
Well, I would say, what does connectivity mean to traveler? I would say it can mean different things for different type of travelers. But to keep it, I would say, well, in short, it should be easy, it should be flexible, it should be cost efficient, and well, last but not least, it should be safe. I mean, especially in considering the current context, and still with the COVID and all the disruptions and all the, I would say, hustle that we have seen in the last couple of years, right, in various airports, in terms of the long queues and all that. It needs to be, yeah, safe and simple and easy. So that would be my short
And we
summary.
have seen, I think that's interesting you've added safe, because actually that's not really on my radar anymore. It shows how fast we move on, really. But we've seen the last couple of years some airports, I think, John, you were talking about Milan to me earlier, where they ripped out some of the old screening processes and put new systems in, so passengers no longer need to take their liquids out and identify them separately. Some airports have used the last few years to invest in changing and transforming some of those processes, just to make the process of going through airports better and easier for customers, for travellers, isn't it?
Yeah, they have, and it was not an easy pandemic. Was not an easy time for anyone, was it? And many would say it would be madness to be investing in infrastructure during that particular moment in time. And indeed, where did you find the money from to invest in infrastructure at that time? But connectivity for me is just about convenience, isn't it? It's got to work. That's the most important thing, and it's got to be seamless. So if you're transferring from one airline to another, yes, you might see a different livery, you might see a different uniform, a different language on board the aircraft, but you've got to be able to see that it works, it's seamless, and it's competitive, and that competition can be manifesting itself in different ways, can't it? It can be the schedule, the elapsed journey time. It can be the price. In some parts of the world, connectivity is outrageously expensive. It makes no sense if you're in Africa that you need to fly up to Paris to then fly back to another West African destination, because connectivity is intra-region is awful. So it's different things to different people. I think in-flight entertainment has gone, unless the in-flight entertainment is looking at your fellow passengers. Most people have got Netflix and an iPad now, and you take your own tablet on board, and some tablets make you sleep and some don't. As for the catering, I don't think anyone gets on board an airplane to have the best cuisine in the skies.
Great. Okay. Well, let's call it there. Thank you very much, both of you, Juana and John, for all your insights today. We will be back on March the 15th, another Wednesday, in a month's time. So do sign up for the webinar then. You will be able to access the recording. I believe it gets sent to you after this, and it's always, the recordings for all our webinars are available on the OAG website. So please do go and have a look at those. And on the website, you can find John's regular blog and a whole range of other blogs and resources about what's happening in the industry, so you can stay up to date all the time. Thank you once again, both of you, and we'll see you next month.
Okay.
Thank you. Bye.
Bye-bye.